Hey everyone, John Pace with the Pace Richmond Group here. Hope you're all doing great. Wanted to give you an update of where things are in the market. We're firmly into the third quarter and we got some great data to share for the first half of the year. So I thought you might find this information helpful and be able to use that going forward if you have any real estate needs, whether it's this year or next year. So let's get to the graphs and the information that we have. So I wanted to start with some national data for you. Unemployment. We are the lowest unemployment that the nation has been in the last 30 years. We're currently at 3.6%. Full employment is considered to be around 5% or so. What we're seeing is that employees are actually able to dictate terms to the employer versus the other way around. So wages are definitely going up across the nation right now. In addition, our GDP is about 2.0% as of June 2023. The economy is fairly healthy, and along with the low unemployment, those are two really good indicators of a healthy economy. Inflation is finally starting to ease. Where it was in the 6s or 7s, we just got down to 3% back in June. It looks like the economy has finally absorbed all the money that was dumped into it during the COVID era, and that maybe has processed through our economy. But right now, once again, unemployment's low, GDP is healthy, and inflation has eased back down to about 3%. When it comes to real estate nationally, however, things are a little bit different. I would even say real estate may be in a recession. Nationally, we're down about 35% in the number of units sold in the past 18 months. Richmond itself is down about 22%. However, as we'll see a little bit later, the recession is going to be more for the realtor or the businesses tied to real estate than the actual buying public. And while parts of the country will see prices going backwards a little bit, Richmond itself actually is doing very well and is still increasing pricing. The reason the government had raised interest rates was to slow the economy down, especially around real estate. And when you look at the units being sold, that is definitely working in the government's favor. However, what's frustrating the government more than anything else right now is that prices nationally haven't really slipped back the way they want them to. If you remember back in 2008, prices crashed when the economy shifted. We are not doing that right now. Larger markets in the United States have actually gone backwards in pricing, but some of the smaller markets like Richmond are actually increasing in price. And that's giving the government concern because they don't want to lower prices, or lower interest rates, I should say, where it actually would create another buyer's boom where inflation will get out of control. So at this point, what I am foreseeing as far as interest rates goes, the government's going to keep them right about where they are. We might see 1 or 2 rate hikes, but we're not too far from where we are right now, which is a hair below 7%. I think the next 12 to 18 months will be more of the same that we have right now, and then maybe late 2024, early 2025, we might see interest rates actually going down at that time. What's contributing to some of the confusion in the market is that buyers seem to have accepted the interest rates that we are currently at, but sellers have not, especially those who either bought or refinanced in the past couple of years, maybe down in the upper 2s to low 3% interest rate. And that's hurting the buyers that want to buy right now because there's not as many sellers who want to swap out a 3% interest rate for a 6.9% interest rate. A lot of these sellers have decided to stay put money into the house, maybe renovate it and make it a long-term home for them versus moving to a different property or different part of town. If and when unemployment gets to about 6%, we might start seeing sellers having to make changes of where they work and maybe move to a different town, which will open up some inventory for our local market. But we don't think that's going to be happening in the next 1 to 2 years. I think based upon their interest rates where they're going to be, a lot of homeowners will be staying put for right now. And lastly, with interest rates going up last year, builders got really concerned about putting more money into homes in case buyers change their mind with a higher cost of living based upon the interest rate. We're starting to see builders get back into the game of building, and it'll be interesting to see if they keep that going, because if so, that is starting to turn into a more dominant supply source for our buyers to buy. Or in more healthy markets or standardized markets, we'd see 10 to 15% of the market be new construction. We're starting to see 30 to 40% of our market turning into new construction at this point. So what I want to share with you now is the statistics for what we call the greater Richmond metro area, which includes Chesterfield, Hanover, Henrico, and the city of Richmond. And as I alluded to before, our new listings are down 35% year over year as of June. Pending sales are down 22% year over year. Closed sales down 22%. Days on market is up 40%. However, when you look at the numbers, we're going from 10 days on market to 14, which is really not that big of an increase. The median sales price, however, has gone up almost 4%, and the average sales price has gone up 8%. So while the number of homes selling has dropped drastically, pricing has not slowed down. And as I alluded before, that buyers have accepted the interest rate, that's exactly what we're seeing here. So where does that leave us? What we're starting to see is we're getting back to a more normal real estate cycle where spring, followed by the fall, the two dominant seasons for real estate, and then summer and winter tend to be the softer months. That went away for the past 4 years and came back this year. In fact, the first weekend of June got very quiet for about 2 weeks. We hadn't seen that happen in several years. So what does that mean going forward for you? So if you're looking to make a change, whether it's this year or next year, definitely talk to your favorite realtor on our team. The data they can provide you is going to be real time and help you make decisions. But you may want to consider, if selling is the most important thing to you, look at timing that for a spring or fall market. And if you're thinking of making buying the most important part of your transaction, look in the shoulder months, in the summer or possibly the winter, where you have more opportunity and less competition. Lastly, while the number of homes being sold in Richmond has dropped precipitously, our team has done really well. In fact, we're up 20% over last year. And we need to find talented people to join us who want opportunities to build their business alongside ours. So if you know realtors who are currently in the business, who are very good at what they do, but maybe struggling in this current economy, in this current market, we would love an opportunity to talk to them. Please make an introduction to us and we would take great care of them. Have a great day. Thanks for listening. We'll talk soon. Bye.